Can we talk about this DPO IPO thing? Can someone explain why Palantir did a DPO versus an IPO? First, what is an IPO? What is a DPO? And why did Palantir do a DPO over an IPO? I think maybe Sachin can explain something.
See, in a very layman words, like if you remember, like one of the things which Karp said that when they went for public, it was not as they planned. Like I mean, it was kind of they were situation where they decided to go very fast. Like okay, we have this much timeline, and we are so their event of going public was waited for a long time. Okay, Palantir wanted to hold it as private as long, but then what happened at starting 2014, their valuation got stagnated. Okay, and it stayed stagnated for a long time. Ideally you would have a valuation boost in that long before you go for IPO. Okay, so that was one reason. Another thing is that they also realized that they cannot create a lot of new equity because there is already a lot of existing equity that needs liquidity. Okay, they need to provide some liquidity for existing shareholders because of all this lockdown. Okay, if you go with the investment bank point of view, I mean, they would still like you to do as much as possible to do an IPO because that helps them. And Palantir was not looking to raise a lot of cash.
Can you explain that real quick? Why does an IPO help Morgan Stanley? Like, what benefit do they get from that?
Because they underwrite the company's stock. They need to create stocks and new equity. They get like 5-7%, 7.5% is kind of a standard that they get. They need to boost, they write the ratings for it. So for example, like now I'm helping one of my clients to actually enter in IPO just before it. But I mean, we do not have any conditions to liquidate. I mean, we do not have a lockup period because the time we are entering in. So if stock is being it does well, which could, I mean, depending on how the analysts write reporting, I mean, it's pretty much like a good money in a short amount of period. And people who are writing this, they will make money as well. So I mean, the more the scope of investment banks, more the scope of underwriting a company and its equity for an investment bank, more the money they make. A lot of money they make is free money actually. They are not taking the risk you are taking on the stock. See what happened with Rivian. Okay, I mean, yeah, I mean,
can you explain what underwriting means? Underwriting means like they provide a foundation for the stock to be able to get higher when it goes public?
Yeah, I mean, in the most layman word, underwriting is a kind of a financial evaluation that we trust, and we, based on this evaluation, this is the kind of valuation, this is what the company's forecast look like. It's a kind of an endorsement. Okay, and they get paid for it.
Gotcha.
Okay. It's, I mean, I'm trying to simplify it too much, okay, but that's how it, I mean, in principle it works. So what happened, like for example, when the Rivian came, there was a boost, and then people say, oh yeah, we need 165 as my target, then 165 went to 116, then 116 went to now. I mean, people like me, I mean, we had an idea that it will eventually happen. This is why Puru went and he shorted Rivian right from the starting. So you guys need to understand that if you think that financing world is fair, yeah, guys, I mean, you are in the wrong business. There are people with information. There are people who have better understanding. There are people who have better way to see companies. There are people who have better strategic thinking to evaluate situations and see between lines. And these are the people who are going to make money. And you like it or you don't like it, the fact is a lot of people make money in stocks because in general economies does well, and you pick companies and most of these companies goes up. But if you really want like doing transformational investing, yeah, you really need to upgrade your skill set. There is no other substitute for that.
Real quick before Chris goes, Jacob's comment, they underwrite and get a premium on the shares they get and then immediately flip them to retail on the secondary market. This is what happened with Airbnb. Airbnb is a $100 billion company right now. Airbnb was IPO'd at $633 a share, and I think it ran up to like $130 that day. And the Airbnb founders, when they were asked about it, they were kind of pissed off, even though they were trying to hide it. They were like, well, JP Morgan said 63 was a fair valuation, and then we get to 160 on our first day. It's like, well, if you had IPO'd at 160, Airbnb would be a lot more valuable, and the founders would have gotten a lot more wealthier. But these banks, they want to get a lot of value out of you. And as Sean was saying in the chat, the reason Thiel DPO'd and Karp DPO'd is because Palantir has always said, and they've explicitly said, screw you to Wall Street, because they believe the organic growth and the numbers will force Wall Street to buy versus creating spectacles for Wall Street to give you good reviews and then buy, via an IPO.
The other thing is these clients have these banks have clients that they have, right? That they want to say, hey, look what I can do for you. I can get you into this IPO at a really discounted price. Like it's going to shoot up in a very short period of time. So I'll get you in at a really good price. So guess what? In terms of managing clients, this is great. That's why these banks do these IPOs, right? So that they can pick and choose who it is. Usually when these IPOs come out, especially the ones that are really popular, right? You need to have an inside connect at the big banks to get you in for good deals. Otherwise, you won't be able to. You'll have to buy them on secondary on the market after IPO. So
I'll tell you a real incident that happened with me recently is, so I got a message from one of somebody in network. I mean, I do private investing, and they said, "Oh, do you want to buy a block of Paytm share before the IPO goes?" And there was like a lot of positive report about it. And I was thinking like, okay, why somebody wants to sell me a block of Paytm if it is going to be so good? So I stayed away from it. I mean, Paytm IPO'd, and we all know what happened with that. So these people actually know a lot of time that how to, like, whether the stock is there's a momentum at the IPO going up or not. And yeah, you just cannot trust a lot of these things. Okay, I mean, this is how the world is. I mean, they will allow you to buy Bitcoin, but they will not allow you to buy shares in private companies. And what is happening, there's a lot of private money, and companies are staying longer private for, like, I mean, Stripe was 152 in the secondary last I checked. I was checking a recently block. Somebody was even quoting $220 billion. So SpaceX shares have traded 115. Guys, how long? I mean, you'll wait. So there is a bias, and the world of investing is asymmetric. Okay, so if you get completely swallowed by the opinions of street, yeah, I mean, the street is not working for you; they're working for themselves. So just be smart from that point of view.